Joining me now is the analyst behind that call, Citi's Chris Danely. Chris, I hear what you're saying here. I also have noticed that a lot of these chip names pulled way back in the months leading up to this year. Thinking of the likes of Marvell, Qualcomm, they're coming out with these new products. They have these growth areas. The CEOs were all excited about the stocks going up, and then they tanked. So why at this point, even though there's been a run-up in the SMH, is it a bad time to buy in?
Sure. So we were just in Asia last week and really digging into the supply chain and where all these products are being made, bought, sold, et cetera, et cetera. And what we found was that AI, or generative AI, is doing very well. But that is a very thin slice of the market, essentially NVIDIA and a couple of others. And then the rest of the semiconductor market, from handsets to automotive to industrial, and several other end markets, even data center that has too much inventory, is still pretty weak. So, hey, we like NVIDIA. It's doing great. But, you've had numbers come down so far this year. We think numbers come down again in about a month and a half when these companies report. And, you showed the chart where we've had this, big spike in the semis over the last month and a half. AI is going to be great. It's just a little small as far as a driver goes right now. So we're just saying, hey, let's pump the brakes a little bit and maybe take some profits.
Okay, but Chris, should semiconductor investors even really be focused on AI across the board as a driver? I mean, you can look at the continuing move toward solid state memory as an issue. You could look at the shift in automotive platforms toward autonomous and digital. You could look at the digitization of the manufacturing floor as a potential driver. None of those directly AI related, but all of them continuing to happen. Are these stocks richly priced when you consider potential growth from those things? Do they need an AI storyline to deserve to go higher?
Well, they definitely need that, and they're definitely grabbing onto that. I mean, AI was mentioned seemingly every other sentence in most meetings we had last week. But like you talked about, most of this is just way out there. Right? And you're talking a few years out in the future. So right now, it's just low single digits as part of a percentage of semis. And the one statistic we looked at that really scared us is the SOX index is at a 40% premium to the S&P 500 right now. That's the highest premium it's had, I think, in 15 years since the global financial crisis. And, you're in an environment where, in aggregate, the numbers are going to be coming down. So, we're just saying, hey, pump the brakes here a little bit on this AI. It's going to be great. Clearly, NVIDIA is getting all the hype and a lot of the business right now. But for the rest of semis, it's a pretty tough environment.
And that's what I wonder, is the difference between the valuation of the names that are at the top very different historically from the valuation of the names at the bottom. So is the whole SOX sort of priced in a way that's concerning, or is it more that certain names have run up so far that it makes the whole index look relatively expensive?
Yeah, I mean, it's almost like I cover the meme stocks or something like that, right? NVIDIA had such a huge blowout of a quarter. Folks just started buying everything they can get their hands on. And then you had a lot of other companies say, hey, we do AI too, even though it's only 1 or 2% of their revenue. So, these things happen. The semiconductor space is extraordinarily volatile. I've been covering it for 25 years. It's never not been volatile. And so you can have periods of time like we've had over the last 6 weeks where you get these sudden spikes. But you have to be a little bit nimble, in our opinion, especially given the environment, even for the second half, looks a little bit sketchy right now.
All right. Chris Danely, thank you.